Some market analysts are revising their inflation forecast downwards for the second quarter of this year. They cite lower Certificate of Entitlement prices. They also say Singapore's economy continues to do well. Economists say sectors like services and manufacturing are also performing and believe this scenario may well boost consumer spending. Nadira Zaidi has more.
In the first 3 months of this year, this CrossFit box received up to 8 new membership sign-ups a month. It's a good change compared to what the firm experienced last year.
We haven't seen that trend last year. We maybe have, on a good day, up to 5 enquiries, and actually maybe just 3 to 4 people will walk through the door every month. So 7 to 8 is about a 50% increment this year.
Even as business is picking up for this gym, the company is looking at other streams of income. It's still concerned about inflation affecting consumer spending and its overhead.
The company and the business has come up with different sorts of services, such as corporate programming, or even engaging with school, engaging with HPB to do projects. So these external projects actually could help to cover like any inflation costs.
Some market observers say core inflation, which excludes private transportation and accommodation, is expected to remain elevated in the near term. Singapore Central Bank expects it to fall only in the fourth quarter of this year.
Services inflation, including on some components like recreation as well as education, continue to be fairly sticky as well due to healthy demand. But at the same time, other headline components like energy inflation, due to base effects and also due to some retreat in car prices, I think that will help to keep the headline inflation on the back foot, helping to retreat headline inflation further, even as core inflation stays somewhat sticky.
When it comes to economic expansion, analysts expect continued growth, especially in the later half of the year. They believe the manufacturing and tourism sectors will provide some boost.
We think that the upturn in the global electronic cycle has further to run and should broaden out to less advanced chips in coming months, driven by ongoing replacement cycles of consumer electronics. For tourism, tourist arrival numbers increasing as compared to last year will augur well for, of course, the tourism and consumer-related industries.
The strength of the Singapore dollar is expected to remain fairly strong, and that could put a damper on tourists visiting Singapore. On the flip side, Singaporeans travelling abroad will benefit from the better exchange rate against other foreign currencies.
For regional travellers, they may continue to see that when they visit other places like Japan, like Malaysia, Korea, as well as Thailand, they find that their exchange rate is relatively favourable in the near term.
The Monetary Authority of Singapore will be releasing its economic forecast survey tomorrow.
We want to dig a little deeper on the mood and sentiment of business in Singapore. For that, I'm joined by Kok Peng Sung, Chief Executive Officer of the Singapore Business Federation. Thank you, Mr. Kok, for coming in and joining us. Now, we heard from the story that business optimism is up, but what in your mind do businesses most worry about these days that could potentially derail growth?
Thanks, Jill, for inviting me in. I think we did start the year with a bit more bearish outlook. I think when I was in the studio in January where we shared the survey, the portion of businesses, that actually believed that the next 12 months will be better actually had a decline. But I think there are signs of optimism, as I think reported by your reporter. On the whole, Q1 economy grew by 2.7% year on year at Q1. I think that's almost the fastest pace in almost 18 months. And the 3 sectors that really drive the growth is, of course, finance and insurance, transportation, as well as wholesale trade. So I think that is pretty positive. I think manufacturing upbeat will resume, particularly because of the electronic sector. I mean, there's a huge demand for AI chips, for example. And the domestic sector has also been a pretty good sign of recovery. So I think that will give us certain momentum. But downside risks actually still remain, right? And I think one of the key risks that companies is increasing concern is geopolitical risk. I just remember reading one of the more recent issue of Economists, which had on its cover talking about the breakdown of the world economic order. And that breakdown has really reversed some of the gains of globalization. And really, for a small open economy like Singapore that's so dependent on trade, any fragmentation of the multilateralism will actually threaten our livelihood. So geopolitical tensions which starts to affect global supply chain as well as commodity, is really affecting business sentiments nowadays.
All right, so it's not all rosy, but you know, there was a time when companies who speak about going global, China would be definitely on the top of that list. Is that still the case today, or where else are companies looking at?
Indeed, China continues to be favored, but again, going by some of the sentiments by our businesses, we do surveys of businesses, and the good thing is that almost 3/4 of Singapore businesses has overseas operations. And for those companies with overseas operation, 40% of them say that a huge percentage comes from overseas. And when you ask businesses what are their top 3 countries, Malaysia, China, and Indonesia. But what I think is worrying is that we're starting to see that when we ask them, do you have any intentions to go overseas? And that percentage has dropped, for about 8 percentage points, from 65% down by another 8 percentage points. And the countries that they're looking at going overseas, China no longer features in the top 3. It's now Malaysia, it's Vietnam, it's Indonesia. So I think business sentiments in China has indeed pretty weak. I think there was a lot of expectation that coming out of COVID, with China opening up, you're going to see growth. But growth has been quite subdued over last year, right? I mean, the global demand is weak. The domestic demand is also weak. Certainly, the reconfiguration of the supply chain plays a lot of that. And the real estate sector is struggling. And we are also starting to see some of these weak sentiments translating into Singapore business interests. I'll just share one data point, not hardly the most scientific one. We usually bring Singapore businesses to participate in the China Import and Export Fair. That's one of the largest fairs that is in Shanghai every year in November. Last year, we brought about 56 companies. This year, as of now, we have about 44 companies. Not as many. Of course, it's not that many are pulling out. Some of them have kind of graduated from the Singapore pavilion, to a pavilion on their own. So if you ask me about China, should we be optimistic? Should we be cautious? Well, it depends on the sector that you're looking at and the horizon.
Yeah.
The truth of the matter is that even with all this reshoring, friendshoring, China plus one, you cannot deny the formidable strength that China has in manufacturing.
Yes.
In any location within 100 kilometers, your whole supply chain is there. So it's not so easy to relocate it. So I think that's continued to be a growth.
So China is certainly still a consideration, still up there. But what about the newer sectors? You mentioned Malaysia, Vietnam. They're not very new. Are there any newer places, and how are SBF helping businesses enter these new markets?
So beyond the traditional markets within the Southeast Asia, we are also encouraging our companies to look further. In fact, over the last 6 months, we have facilitated about 700 companies with interest to go overseas. So outside of the traditional countries, we find companies are interested to explore Japan. I just got a team to bring companies back from Japan. And what are they looking at Japan? They're looking at edge technology. They're looking at digitalization. They're looking at smart cities. Last week, thereabout, we just welcomed an Ethiopian business delegation. Ethiopia, so far, what opportunities are there? Well, they're looking for investment in infrastructure, in port, in housing, as well as in renewable energy. And we have Singapore companies that can play in there. We just did a Latin America conference, trying to excite Singapore companies on opportunities in Brazil, in Mexico. Why Mexico? Well, again, with all the nearshoring, Mexico is becoming a site for manufacturing location. Why Brazil? We buy a lot of our poultry from Brazil, so from food security. So many of these companies are starting to look further afar. And what we do is try to support them with market advisories. We also help them with business mission, and more importantly, to match business interests. In fact, as I speak today, we have a Taiwanese business delegation over here. And over the next few weeks, we're going to bring delegations also to Sabah, to Korea, as well as even to USA.
Yeah, I want to get back to how you are assisting these businesses. But, let's slice this interview a different way. In terms of the sectors that you see hold most promise, and which ones do you think need to transform a little bit more?
I think if you look at the growth opportunities, sustainability plays in a big part. I think, of course, when companies think about sustainability, the first thing in their mind is, oh gosh, it's a compliance issue. I have to do my first sustainability reporting. But for many of these SMEs that we talk to, I think the sustainability reporting should not be seen as a cost. Now it is almost a right for you to do business, particularly if you're selling to European companies, which require you to have that anyway. But beyond that, I think the growth in the region and beyond the region in renewable energy is going to be very big, which is why we are pretty happy, that just last week, right, Singapore hosted the IPEF Clean Economy Investor Conference. I think it's a demonstrative effect that Singapore can play a role. It's not just as a forum to bring people together, but play a catalytic role. The Singapore government has announced the 5 billion Future Energy Fund to support our energy transition. And more importantly, Singapore can be a hub to crowd in private and public capital to help the region in their net zero transition. So I think there's growth opportunities. And in fact, for iPad, for example, US are looking for companies that can do transformation from waste energy to energy, recycling of batteries, better sustainable aviation fuel. And our Singapore companies have a niche role and are now playing in those markets.
Okay, so what can companies expect from you? You know, those that are, brave and still want to explore out there. You talked about things that you can do to help them, not just you, but with your partners as well. Any further plans to support businesses?
Yes, we intend to step up our plans, programs to do that. Of course, beyond the market advisories and bringing companies to overseas mission, we are very happy that many ecosystem players are doing that. Just again, last week was a busy time. Last week, DBS launched their Bridging Horizons program, where they're committed to have 1,000 companies through their network to scale overseas. SBF, together with Enterprise Singapore, are supporting partners. And how do we support them? We lean forward to support through our FTA advisories. One of the most well-kept secret, in Singapore is that we have a network of over 28 of these FTAs with more than 65 trading partners. We need to get our companies to understand how to make use of these FTAs to reduce the import tariffs so that it improve their competitiveness and gain market access. So we extend these FTA advisory services to clients of DBS, and together we can help, and we hope to help 1,000 more companies in their regionalization.
Well, busy is a good problem to have.
It is.
We want to thank you, Mr. Kok, for coming in and speaking with us again.
Thank you.
Well, I've been speaking there with Mr. Kok Peng Soon. He is the Chief Executive Officer at the Singapore Business Federation.